Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for, October 17th, 2021. So, before we get into the regular review of trade frames from Ken H. and Luke, this is I'm rolling out a new learning management system. And I'm really pleased with it. It is Rizuku.com. And the first course that I've put up on there is the Leavenworth United soccer team's creativity lesson called Kickstart Your Creativity, getting the mindset, materials, and methods right for generating and developing creative ideas. So I've run this through Angus Fletcher, who's the world's leading authority on story science. And has written the best-selling book called Wonderworks. And he just wrote for me a field guide to creativity for Army leaders. And that one has some basics on creativity, plus it has 30 modules, little exercises that he's designed with some input from me on practical exercises that are going to lead to improved creativity for our officers. I'm working with him to turn that. He's selling that field guide for $2.99 on Kindle. It's a very good price. It's revolutionary for $2.99. I don't know how you do better than that for $2.99, for crying out loud. What I'm going to do is write a field guide for traders using that same model. Only instead of for Army leaders, I'm going to take those same 30 modules plus the basics and turn it into traders' practical exercises. I'm going to sell that for $2.99 as well. So what I'm going to do is produce. So this course I'm thinking of as Creativity 101, and I'm thinking about the Traders course as 202. And then if I can persuade Angus, then we'll do some office hours with him. And we'll try to do some stuff that's, 303, where we're talking with the master himself. And we'll try to get some podcast stuff. Yeah, Ken H. is taking a look at it. It's an amazing book. So the gateway to all that is this course here, which is the Leavenworth United Soccer Club's creativity course. What I do is we have a soccer academy, and I'm making a bet on the future. I'm making the best possible bet on the future. And my bet is that if you want a better future, there's no better investment than investing in the leadership of young people. It's already their world. We're just living in it as caretakers. And I want them to be the best leaders that they can be. And I'm committed to doing something about that. And part of it is I'm going to give them lessons on creativity. leadership, systems thinking, coaching and mentoring, emotional resilience, team building, systems thinking. This is the first course in that whole process, and it's on creativity. Now, what I'm doing is providing this course to those kids by virtue of them signing up and doing the work in our academy. I'm just giving it to them. I'm going to make this course available to you for $100. Course 101. I'm going to make it available to you for $100. If you send me an email, I'll get you enrolled. And it's self-paced, and it's solid. That $100 is going to go and fund the academy, because I got a lot of kids in there that cannot afford uniforms and soccer balls. And the money that this course raises is going to go fund the academy and some scholarship money for the high school and college kids that come and work for me in the academy as assistant coaches. So what I have them doing is learning how to be leaders and coaches and teachers and mentors to the younger kids. And then as a result of that, those kids get scholarship money from me and from us. And they're going to get letters of recommendation, and I'm giving them personal mentoring and coaching about how to be amazing young leaders in the world. So your $100 is the best possible investment a person can make in the future, and that is betting on young people. So if you're interested in that course, send me a note. Send me a PayPal of $100 to Long KE at Yahoo. And I'll get you enrolled in this course. It's self-paced. You can knock it out in a week. You should probably take 2 weeks to do it so that you get the full value of it. If you want to take the 202 course, once I get that thing done, 101 is a prerequisite for it. That one I think is going to be 200. Because I want a lot of people to take that course, so we're going to make it accessible. And again, and that money's going to go into the academy too. Everything that the creativity courses raise are going to go into the academy. Where is my... There it is. So let me show you the... So the first part of it is I don't need you to believe me. I need you to believe your own eyes. That if you read from my captains, that Slow is Smooth and Smooth is Fast essay, and then the Soccer Legacy of the Big Five, that's two of my captains who are helping me in the course, in the academy, that is. And that just shows you the caliber of the young people that are out there. They're amazing. And they learn that stuff from the Soccer Academy. Then there's some welcome and orientation. Then there's lesson 1, 3 core concepts that everyone's creative. Having more knowledge allows you to be more creative. And genius isn't something that you are, it's something that you have. It's how to activate the inner genius. Lesson 2 talks about a couple different creativity models. And the 4 characteristics that they have in common and what it means for you and what you can do about it. Fletcher's work builds on that and goes beyond, but this is a good start. Lesson 3 is about generating creative ideas and some strategies to add some juice to your thinking. And then once you've generated the idea, you want to develop that idea and turn it into something amazing. And then lesson 5 is about applying that creativity in your life every day and how to make that an integral part of your behaviors. And then lesson 6 is kind of a review of all those things. So that's kind of the fundamentals, science-based, current with the best thinking in the world on creativity. And you can knock that out you could go through it, I think, in a week. I would recommend taking 2 weeks, but it's self-paced. You can do your own thing. I think it's pretty solid. Now I have an officer who's doing a master's degree with me at our college, and he's studying this course, Creativity 101, plus the Fletcher work, or what we're calling 202. That's the Fletcher treatment, and he's taken a look at Army Command and General Staff College. That's the he's taken a look at our. We have a creativity lesson called Charlie 120. It's creativity that we're currently teaching the Army. So, and he also taught creativity plus systems thinking at West Point for 3 years. And so he's putting together a master's thesis for me that is going to be designing the update to the curriculum that we're going to teach at the college, and it's going to incorporate these 2 lessons already, and we may have some specific military things that we're going to add to it, but the guts of it are going to be these 2 pieces right here, and so we're pretty excited about about that work that he's doing. So this is top shelf stuff, and those 2 lessons right there that's really going to be a master's degree in a master's course in creativity. If you were taking that in a master's program, you'd probably be paying $1,000 for that. And I'm pretty sure that you wouldn't be under the tutelage of Professor Angus Fletcher and his trusty sidekick, me. So there's the offer. $100 for this course right now. It'll be $200 for this course as soon as it's ready. And 101 is going to be the prerequisite for 202. That's the applied to the trader stuff. So, back to the regularly scheduled program. Hey, while we're here, I want to share this one. My brother is a nurse, like a critical care nurse, and he just had some open heart surgery. So he's recovering, and so he does what people in my family do when we're recovering. So he's been trading for the last 2 weeks, flat on his back, and in his 2 weeks, he's made $1,000 and $1,000 each week, and he's using swing plus hybrid trading. And he's using pattern number 1, the SSC, Collapsing Dragon, and Kata 2. And he's been... So he, in his spare time, when he's not nursing and not flat on his back after surgery, he does real estate refurbishing. You know, he like flips houses or whatever. He's got a little crew of guys that he's given them a job, and they just love that stuff. You know, buying inexpensive houses, fixing them up, and selling them. Well, he's been partnering with a guy who's in the real estate business who finds the deals for him And then my brother runs the crew through there, and they pocket some nice change. Well, it turns out that his real estate partner's wife is in the financial management and wealth building business. Now, they do mostly real estate and insurance and estate planning and all that stuff. And that guy said, hey, what are you doing with all that trading stuff? And my brother told him. So they're flying him out to Las Vegas as soon as his recovery stuff is over. And he's going to be presenting how he does this stuff. And I walked him through the speech that looks something like this. We got 4 buckets of money, and the first one is hybrid trading, and then the second one is blended monthly rebalancing, and the third one is a special, and the last one is options. They've got somebody that's going to make a presentation on options, but my brother's going to be on the stage, and he's going to say something like this on the hybrid trading. He says, hey guys, it took me 2 weeks to learn my brother's techniques for those 3 patterns. And he's just been trading. And in 2 hours a week, he's earned $1,000. He earns $1,000, and so that's $500 an hour. But let's say, hey, you can't do $1,000 a week, but you can earn $500 a week. That's $250 an hour. And let's say you could only get 40% of that, and $100 an hour. And he's going to ask the people out there, raise your hand if your waking activity earns you $100 an hour. If not, you might be interested in learning some of these techniques. And then the BMR stuff, I gave him some numbers from one of our friends in Australia who's been using this to manage the portfolio for his family estate. And last year, with his modifications, he earned 40%. And my brother's going to ask the people, how many of you in minutes a month, minutes per month, earned 40% last year during the COVID with a 5% max drawdown. Minutes a month. And then he's not even going to tell them about the third bucket. He's going to say, look, the options course that lady is going to teach, it's not as good as the options course that Danny Ben Yair has put together for us. The options course that Danny does, well, he's a graduate of the Super Trader program, and he's a professional money manager for 25 years. And he coded the TC2000 bundle that takes all of my systems and turns it into bulletproof code for scanning and filtering and setup and monitoring and execution and risk reward. Kid's a freaking genius. And if the hybrid trading is worth $100 an hour to my brother in his spare time while he's recovering from open heart surgery, I mean, it's really more than that. It's really, for him, it's $500 an hour, but let's soft sell it. And if the blended monthly rebalancing is better than that, and if the options is even better than that because you can control your risk so well, he's going to ask the 1,000 people in that audience how many of them are interested in working with us. So we'll see how that's going to happen in November. I'm just interested as a science project to see how well that storytelling goes, to people who are not necessarily traders, but, who are business people in real estate, but are also interested in adding sort of the retirement account management and trading some of their cash flow. So we'll see how that goes. I don't know what that's going to do to my business model, but my plan is to do this Rizuku stuff for them, and it's probably the foundations course. So I'm not going to let it interfere with the nightly strategy podcast, but just so you know that there may be some changes coming to our operating environment. So interesting times. All right, let's jump into the trades for tonight. We're going to start with Luke here. Oops. There we go. All right. All right, so this is his old reliable CLF. And here's the weekly, daily, hourly. We've got a Kata 2 process going on, and but a consolidation zone up in here. So he's ready to play that breakout to the upside. He's waiting to see it clear that area, get above the RL10s for sure, before he adds that second position long. That's good practice. What I like about this one is that you've got this Kata 2. Now, I am kind of worried that this sell-off was lower than that one, so we got to be mindful about this. But we've already got the first leg in, and it's looking to resume, right? So if we take that as strong support, if this thing does break out from here, and then adds a second position here, and then a third position there, you can see that the tactical recovery is just to there, and then to here, and then to here. So those are three targets on the daily chart to the upside, all of which justifies taking this much risk for that much reward just to the first level of resistance. So that would be, looks like 1, 2, 3, 4R, 4 to 1 to here, then probably 6, and then probably 8. Can it move that far that fast? Yeah, the last time it did that pretty fast. So that one feels good to the upside. I like this on the downside too, because if this violates, then you have this great big, this was a gap and go. So there's not much resistance in here at all. So if this cracks, then you can see that it comes back to this support level pretty fast. So with this much risk, there's 1, 2 rewards to the downside, and then if he adds a second position here, it's going to come to here and then to here, and that's 3, 4, 5, 6, and that's going to be great. And then here's the big one. If that one fails through here and like all the metals get bad, then that's gonna happen. So here's his that looks like this one here. So if he gets short at that iteration, and if this one cracks, he's going to have 3 or 4 positions in, and then that comes all the way down to here, and that's going to be massive goodness. So great one on Cliff. All right, next one. Okay, so this is from Ken H. In the Ken H series. All right, so I think you can see over here on the weekly They had this strong move, the harsh sell-off, and then a 1-2-3. This is essentially a 1-2-3 entry up in here. So finding strong support in this area on expanded ranges. And now, if this one works, on the weekly, 157 is key. So that's only $1, and then another $1 to 158.5 or 150. Call it $2. And then if it gets above 159, this thing is massive goodness, right? So this support level at 159 looks like this one over here. That's this little cluster in here. And so if it breaks above, I'm going to call that 159, you know this thing's going to be a monster move. So the move to 159 from 156 is +3. He's risking about $1. So that's 3-1 just to test, to get up to that test. So that feels good. A breakdown below 155, and that should come back probably to 152. So that's $3 of downside. So this is a 3-1 in either direction. And it's poised right in the middle between those two. So that makes this a perfect critical state. You know, he's risking 1 to get 3 in either direction. What's not to love? And here's your Kata 2. This one was tradable. And this is and we traded that Friday, but this is the frame that he's working with. Yeah, that's the resistance level. So if it gets to this far and starts to fail, you just cash it and make bank. But if it gets through here, I think you can add a second position and go. And then if this fails, it's coming down here pretty easily to see. So great frame. That's standard. You know, so all Ken H does is find great trade frames. Yeah, that's the point. There's so many to choose from. You don't even have to take shortcuts. Just take the optimal patterns for you. Microsoft, you notice this is kind of that same pattern we saw in XLK. So the relationship between XLK and Microsoft is the relationship between the sector and then the leading stock in that sector. So people just buying tech are supporting Microsoft, and when Microsoft goes up, it supports tech, and that's a nice virtuous circle. This one's even better, though, as you can see, because it's already at the peak and ready to go. So if this goes, there's no resistance overhead whatsoever. And who's going to be afraid of that? Nobody. That's a no-brainer. That one is automatic. There's a tactical trade down to the short side here. I think there would probably be easier things to short, but if you were interested, you could. But to me, that thing is just a screaming buy if it breaks out above that. That should be straightforward to see. Advanced micro. I think we could discount this, that price. Just don't even look at that. And if this one breaks above here, also free and clear. And that's really, so it's got to get above about 118. So that gives you +6 to the upside without much resistance overhead, and he's only risking about $1. Maybe $2. Call it $1. If you call it $2, it's 3-1. $1, it's 6-1. The breakdown, this feels a little thin. So if this does break, I think you could trade it back with a target of about the middle of that. About 106 would be the downside. You'd expect to see some support there. If that broke, the next support would be at 101, so there's about $5 there and about $6 there. So again, this is one of those critical states for risking about $1. You can see 6 to the upside and 6 to the downside, plus another 5 to the downside. And if it breaks above this, it's kind of unlimited upside anyway. So what's not to love? Perfect. AMD. Need more chips. Next is JP Morgan. So we've been watching that one as, crucial to the success of XLF. So XLF has been on a tear lately. And you kind of like this. You like this breakout. So this 1, 2, 3, and it's continuing to go. The fact that it came back to this and held support says that there's buying pressure in here pushing it up. So a continuation of that buying pressure on a measured risk should get it back to 171, where now that's the real question. Does it have the guts to go through that? Meanwhile, you got about $4 to the upside, and he's risking about 2 in here. So that's 2 to 1 to make the interesting test of the upside. And if that fails, it's coming back to this, to 161. So that's $4 from 165 to 161, and he's risking 2. And so there's 4 to the upside, 4 to the downside, risking 2. Again, you should make that a tattoo. Risking 2 to get 4. Critical state trading at its finest. Goldman Sachs, also in the finance sector, 1, 2, 3. And it's just breaking out of that support. If it gets above 420, then it's free and clear. So there's 420, and there's 420. His risk is about $6, and he's looking to make about 14. So that's 2 to 1. And then if this does break, first price there, second price there. So just to here, it's 10. That's a little thin, but if this rolled down and failed to here, you wouldn't be surprised if it went to there. So the downside is easy to see also. If you saw Goldman and JP Morgan, the last one, both failing, you might just want to look at FAZ, which is the 3X short on the finance sector. That's probably the easier one to play and take advantage of the power of the downside. So I like that. That's a good one. Next up, Home Depot, just on a tear. It's been crushing it. Everything to love about this one. It's all on the daily. It's already out of this mess and crushing it. It's already at an all-time high. You're buying a breakout. I might even go right here, Ken H., if I'm being honest. I might take a $2 risk or even a $1 risk to get a nice position size and go on that. Like I might do this with a turbo on a $1 risk and then a core position on a $4 risk. So that, like, if I was risking $400, I might buy risking $1, 400 shares on the turbo, and then if it got a nice burst, then I could sell 300, and then keep 100 shares in the core with a $4 risk, and then use the market gains of that 400 shares to pay for the risk that I want to hold overnight. And then just keep trading that forever because this thing is above its all-time high. Could you short that? Yeah, you could. I think there's better ones to short. And the downside targets, to me, are not as favorable as some of the other ones that we saw. This one is just crushing it. I think there's better targets to be short, if I'm being honest. Next one up, Nike. We've been enjoying this one like forever. Like ever since this big gap up, and we enjoyed that trade, and we enjoyed this trade. Now we're enjoying that trade. Here's your SSC with your support there. There's your risk. And this thing is working. And now it's holding. And so if it breaks out again, this is the turbo trade on that. And here's a support level or resistance level. Here's the second one. And if it gets above that, off it goes. He's talking about a $1 risk. The reasonable upside on this one, I think, is 165. But really, the short-term one is 160. So that's like $2. So it's 2-to-1. So you don't want to add the second position until it gets above 160, which is this pile right here. But I don't think that's much resistance. But I would play one position there. Then if it gets above 160, this is where I add the second position and go. And then you're good to go. This is one that has been so vulnerable that you could easily see this thing collapsing, though. And now the move to 151 from 157 is $6 on a $1 risk. That's actually a more electric trade. You're wanting it to go long, but if this thing goes, if it breaks, that's a great short. This thing has been so violent, and that run has been so powerful. It's caught some people by surprise. Yeah, so I like that one in both directions. Great one. Again, I get no directional bias on these things. I want them to move. We want to find the movers. Here's a mover, for crying out loud. Wow. Let's just appreciate this move from 14 to 22. That's a 50% move in natural gas, for crying out loud. And the pullback from 22 to 1850. First move. Now we're just looking to find support. So that's like a Kata 2 forming, which is here and here. So this one is, if this holds here, you can see easily how this thing's going to get back to 20 and a quarter. And he's got about 50 cent risk. And that's about 3-to-1. And then if that breaks above there, then it gets to here pretty fast. And that's where you want probably your second position here. That's where you'd be happy for your second position above 21.5. The downside on this one is obvious to see, and I think you could get a second position in as soon as that breaks, because that's pretty thin, and that thing will drop to 17 pretty easily. This is the key support level. So if you're short here, I think you get the second one right there, and you play it to here. Bitcoin, up, and away. Cautiously optimistic here. That's really both the top of the dragon and the RL10. If this gets above 58, holy mackerel, is that going to go? $1 risk. And nothing to stop it up to 52. So that's +4 on a 1. And then if it breaks back to 42, and that's 5, there it is. $1 at risk, looking 4 upside, and the immediate move down is 5 downside. Love it. What makes me especially interested in this one is this. Is there one more in there? Yeah. Let's see. But if there isn't, 45 and then 42 are both in play. And if 42 cracks, it's back here and then back here in a heartbeat. But there was a lot of true believers buying hard right there when it broke above this price level. Nice frame. Due diligence. Manage your risk. Brazil, old standby. That was the beautiful hybrid frog trade that we made Friday. 1, 2, 3, and go. So if that holds, this is one where I think if it breaks above, say, 33.40 and 33.20, I might do that with the 20-cent risk. And again, that's one of those turbo and core positions. So I want to get paid on that right away so that it gets through here. And then it goes to here, to 34. And then I think the breakdown, I would be right here instead of all the way down here. I like getting that one faster. To me, 25 cents is the MMRB in Brazil for hybrid frog trading. This is a frog champion. You can see what it does on swings. I mean, this thing swing trades like a maniac. And here's the support. And now it's just getting ready to start up that stack again. Oh, man. This is all you ever need. I mean, really. EWZ. Holy mackerel. What a trader. And look at that thing just leaving the station. Whew. 37's in range. Trades like a champ intraday. Lots of volume. Tight spread. Big economy. Very volatile. It's got everything. Next up, Caterpillar. Let's put in a nice base down here at 190. Everybody that still owns it believes it needs to be at 240. So you're talking about a $50 range to the upside. So how much, your $10 risk? On the swing trade, that's a 5-to-1 long term. Nice strong support in here, nothing to worry about. $1 risk. Oh, target. Man, the price ladder on this one is you're just going to love this one. It's cleared this crap for sure. Going. $1 of risk. There's $3 to here. So that's 3-to-1 to the upside. Just on the first play. There's better ones to get short on. But that's a great one. Great find. Is there a safer company in American infrastructure to buy than that one? I don't know. I don't think so. Verizon. Oh, boy. What a trader this one is, too. Frog champion. Big crush. Big jump. Bigger fail. Trying to find support. There's a 1, 2, 3. That was a 1, 2, 3 entry. And so and now it's got all of that thin resistance to break through to try to get back to what everybody believes and hopes is fair value, about 54. So this entry here, I think my stop would be here. Maybe a 30 cents. I mean, I don't mind a 50 cent, I guess. That's a 50-cent box, I think, for position sizing on the turbo. And again, this is the turbo and the core, where I'm trying to get paid strong on this and then cash a few positions and leave the remainder as a core with the risk to be funded by the gains that the turbo made. That's going to recover that. That's not resistance. That was just panic selling, and it terminated here, and already the first wave of buying put it into here. And they already, and then that's the profit taking, and it held strong here. So the next urge up is, that's the second leg. And so if that's leg 1, this will be leg 2, and that's leg 3. So your first target is here at 53.50. So that's $1. And so if you're risking 50 cents, it's 2 to 1. If you're risking 30 cents, it's 3 to 1. Core and turbo all the way. And then the failure will come back to 51. And then that, if that breaks, that's where you have the second position short at 51. Brooks Automation Technology. This looks like some company that Ken knows something about. Ken H. Now, that's the test. It made the first jump out, came back and held support. It held support right at the previous support level. It failed to fail further, and that's about a 1, 2, 3 entry there. And now you're getting the next leg up, and 111 is still in sight, and it's from 104, so that's plus 7 on $2, so that's 3 to 1 to the upside. And then if it fails, it goes to 98, and that's $4 on the upside, so that's a 2 to 1. And if that fails, that's where your big move is going to be, down to 93. So I like that one in both directions. Great work. Okay, now our last one. This is the consumer discretionary versus the staples sector analysis. And this one is showing essentially risk on. That the COTA 2, this is telling you that's risk on. And that was a case where the 5 to 7% sell-off has been slowly been favoring the people taking the risk, and now it's ready to have a risk breakout to the upside. And we've seen declining volatility and a good recovery off the bottom. That's telling you people are stealthily getting risk on because they are favoring consumer discretionary, which is XLY, versus the defensive plays of consumer staples. So that's a sign that they're voting on the long side and risk on. Okay. All right. That's everything we got. Remember, if you want that creativity course, it's $100, and it'll never be cheaper than that, and it's probably going to be more expensive once the word gets out, especially if those folks out in Las Vegas with my brother's pitch want to get in on that. So this is the best price you'll ever see on that one. $100. Send me an email. All right, take good care, guys, and we shall see you tomorrow, ready to rock. Nice work, Ken H.